Hello, this is our review of oil. Today is June 11, 2018. And just want to go over some of the price action that we saw today, which was excellent, and what play we made. So looking at the daily chart, we always start with the daily chart. And you can see that oil over the last few days has retraced. Overall, it's in an uptrend. How do we know that this is an uptrend? The 200 period moving average, the 100 period moving average is above the 200 period moving average. So that tells you things are in an uptrend. The market is trying to make higher highs. But what happened over the last few days is that it got overbought and had a small retracement into this AVZ, average value zone, between the 200 and 100 period moving average. And since the 11th, you can see that on our breakout indicator, you can see that we had a breakout on the 11th to the upside, and looks like we're starting to make higher highs again. So, and what you're seeing here are the monthly averages, the monthly ranges. The monthly range on oil is roughly $6. So if you measure on the daily chart, you always want to measure from the previous high, from the previous month's high to where we are currently, and we are negative $7.85 from the previous month high. Okay, so that gives you a good idea that price wants to retrace back into this mean, into that zone, into that area or that range. And of course, we're back up on the 200 period moving average, which is acting as a support level. And on our breakout indicator, we're starting to see that we're making higher highs. So what does that tell you? That tells you that we're anticipating more higher highs. Higher highs, okay? So that's where we start. We start with the daily. The daily tells us what the trend is, where we are in the average true range. It tells us what the average true range of oil is. Right now it's $1.53. If you look over here, oil true range is $1.53. So it's vibrating about $1.53 every single day. And the overall market energy is moving up. And then finally, the breakout period indicator is telling us that the overall market is making higher highs at this point. It's finished with this sell-off phase, and now we're going to be moving into some higher highs. And if you look, it's actually broken above the 9-period moving average. We're above the 9-period moving average now. So that's what we use the daily viewpoint for. It gives you a global perspective on things, how the market is moving, the kind of trend you're in, where you are in the range, the monthly range of things, and gives you the average true range. It also gives you where you are in the cycle of breakouts. Are you breaking out to the upside? Are you breaking down to the downside? Right now we're breaking out up. We are making in a cycle of new highs, and we're anticipating over the next several days several more new highs. So let me take you to the 1-hour chart and show you what that looks like. All right, currently looking at the 1-hour chart. Each bar is 1 hour, And I know this looks very different than the chart that you saw before because this is more of a non-traditional chart. You're looking at a trend channel, the Raft linear regression channel, and it's telling us that over the last 90 days, based on the last 90 days of price action, that we are in the -2 standard deviation zone. We're between -1 and -2. So we are mean reversion traders, so that basically tells us that the prices most likely will try to come back to 69.84. This purple line is the mean. And you know, it gives you an idea of, you want to think of this guy as a attractor, like it's a magnet that's pulling price back to the mean. When it gets far away, it wants to pull back in. When it gets far away, it wants to pull back to the mean. On average, price typically deviates from the mean about $3 before we see it retrace back to the mean. And in this example, today we were $5 away from the mean. So at that point, we're thinking that price will want to snap back to the mean. And as you can see, that's exactly what it did. All right, so that's the 1 hour chart. You see that we have extended the move down from the previous high. Let's blow that up. From the previous high to the low of day, you made a 136 move, $1.36. You are $5 from the average, from the mean, and the CCI is -224. And we know from the daily chart that we are oversold to the 200 period moving average. So this would be a great location to take a long entry because of all those reasons. I'm going to pull over a 5-minute or 15-minute chart and show you exactly where you would have gotten in and exactly where you had placed your risk. Let's just make a quick mark time level here so we can see that, okay, well, here we know we're very oversold. We know we're $1.34 from the high, and we know we're $5 from the mean. So that's a very, very oversold level. All right, now I'm going to pull over the 15-minute chart and show you exactly when and where you would have got into this move. All right, let me just okay, so this line is the level that we just demarked, kind of notated that we were very oversold here. Our CCI on the 1 hour chart was -2305. We were $5 from the mean, and look here, we're right below the -1 standard deviation level, and we are $1.36 from the previous high, and you're just kind of hanging out at that point waiting for an entry candle. And if you were patient enough to wait to be on the 5-minute, there we are. So this would have been your entry, 7 o'clock a.m. And if you got up a little later, you would have had another long entry at 9:20. And all of those entries would have been great to go long. So at this point, you would have been risking uh, you would have been risking 45 ticks, and you would have gotten out with 87 profit if you exited at the mean. If you managed to capture the whole move, you would have came out with a $1,430 profit over a 4-hour period. Not bad. But that's not easy to do. But if you had managed to stop along the 5 minute. So that's the move for the day. And as you can see, the Raft channel is very precise in locating entries and where to manage your risk. Okay, take care.